Good afternoon, it's Midcap Radar time on CNBC-TV18. We are live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me is Vivek Iyer. Vivek, good afternoon. A similar script playing out at least for the benchmark indices. You're holding on to 22,800 on the index, but the broader markets are the story of the afternoon.
Good afternoon, Hormas, and good to have you back. That's right, it's a sharp recovery from the intraday lows as far as the mid-cap and small-cap indices are concerned. We have quite a lot lined up on the show. Let's start off with the top headlines. Mid-caps clock gains even as frontline indices oscillate in a narrow band. PSU banks along with oil and gas eke out gains while banks and financial services drag.
NHPC has gained after CLSA has upgraded the stock to a high conviction outperform. It says that the stock correction gives investors an inexpensive opportunity to accumulate the stock. Meanwhile, Tata Power has also gained after HSBC upgraded the stock to hold from reduce and increased its price target to 345 from 300 earlier. The company has also partnered with Amazon Web Services for energy transition in India.
Just Dial surges in trade as Nuvama upgrades the stock to a buy rating from a hold stance earlier. The brokerage has set a target price of 1,140 rupees a share, citing compelling valuations.
India Glycols has surged after winning a 1,200 crore rupee order. The company will supply 18 crore litres of ethanol to oil marketing companies. A familiar script playing out, as we just mentioned. 22,900 is where the Nifty currently is. In a very narrow range is where it has traded on a weekly options expiry session devoid of the volatility that generally is associated with the index on a day like this. It's been a relatively flat line after the gap down in the first few minutes of the trading session and then that subsequent recovery. Since then, it's been that 22,850, 22,900 band that the index continues to trade under. But the broader markets are the outperformers of the day. They're continuing some bit of recovery from the lower levels, although they are slightly off the highs of the day. The mid-cap index is up 0.7%. The small-cap index still holding on to gains of 1%, and there are plenty of stock-specific movers within the broader markets. Which are those? Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. The mid-cap, rather the broader indices continue to outperform the benchmarks, right? Let's first look at the stocks that are gaining momentum in trade today. Let's first look at the top gainers. Godrej Industries, that stock is up nearly 18% today. Piramal Pharma also close to the day's highest point, up nearly 11%. We also have NetWeb in focus. Amara Raja are some other counters that are up anywhere between nearly 7 to 9%. Apart from that, the metal index is the top sectoral gainer today. We have APL Apollo Tubes surging by almost 5%. Some other counters, Welspun Corp, NMDC as well as Nalco, they're also up somewhere around 2 to 3%. Apart from that, keep an eye out on capital market plays as well. Keep in mind that they were buzzing yesterday as well and they continue their momentum today. BSE was up nearly 8% yesterday. This is a further uptick on that. This is a nearly 5% uptick. KFIN is another counter that is up in a way, nearly 3%. Nippon Life as well as Motilal Oswal are some other counters that are up over 2%. Apart from that, let's also look at some stocks that are gaining momentum on the back of very strong volumes. Linde India is up nearly 8%. Rajesh Exports, Maharashtra Seamless, as well as Radico Khaitan are some other counters that are up in a way in trade today. On the flip side, let's look at some of the top losers today. Godfrey Phillips, that stock has been surging over the last couple of trading sessions. Today, that stock is down nearly 6%. Ajanta Pharma down 6%. JBM Auto as well as India Cements too trading lower today.
Thank you so much, Vamakshi, for joining us and giving us a sense of the action as it pans out the broader end of the markets. Let's now welcome Vinay Rajani from HDFC Securities for a technical check on the market. Good afternoon, Vinay. Thank you so much for joining us. What are you making of the index at the current levels?
Yeah, good afternoon and thanks for having me on the show. So data is suggesting that there should be a range-bound session for the rest of the day, and today is a Nifty expiry and broader markets are performing well. But as far as Nifty is concerned, it is protecting the support of 22,700, 800 for last many times. We have seen that this is the fifth consecutive time Nifty is taking support there. So yes, there is a support, but broader markets are indicating something else. So if we believe that even if the support of 22,800 is breached, then also market will not do that bad. In fact, broader markets will continue to do well because there was a bullish engulfing candlestick pattern on the Nifty small cap and micro cap indices yesterday, and today they are witnessing 1% follow buying also. So overall market breadth is suggesting that market should remain bullish only. Nifty today is expiry, so there could be a different movement in the benchmark indices, but overall on the markets it seems that market should do well from here. If not today, derivative data, the put call ratio, the kind of implied volatility data I can see on the derivative side, it is showing that today's move could be a range bound move. Nifty should remain in the range of 22,900 to 22,950. That's the range where we are expecting Nifty to close in today's session. But in coming days, yes, we are expecting that market should do well. And ultimately, Nifty is headed for the target of 23,600, where 50 and 200 days exponential moving averages coincides. So overall view is bullish on the market. And no, if not today, but in coming sessions, we can expect some recovery in the markets.
So do you use that recovery, a potential recovery, Vinay, up to 23,600 to reduce your long positions, or do you continue to stay put for further upside if we do end up crossing that 23,600? That's part one. And of course, couple that up with your stock recommendations for the afternoon as well.
Yeah, so definitely right now it is the setup is not that bullish, so we are not taking a bigger view right now. We are just taking a view till 23,600, which is a meaningful resistance provided by the 50 and 200 days exponential moving average. But at that time we will review the situation. But as of now, we are taking a view of up to 23,600, around which we are asking traders to book profits in the long position and be on a sideline, and then to review how it goes. But yes, one can book profits around 23,600. That's the overall chart is suggesting to us. And regarding the recommendation, yes, so my recommendation in the long side is the Castrol, which is trading at 214. So Castrol we have already recommended to our traders, so one can buy a Castrol with a stop loss of 203. And we are expecting a target of 230 in the coming session. So this is not a 1-2 days move, but for next 1 week, Castrol can be bought. The another one which we like is from the capital goods space, BHEL. So BHEL has been forming a positive divergence oscillator wise, and it was quite oversold. And yesterday we saw a bullish engulfing candlestick pattern. So around 198, one can go long. We can expect a target of 213.50, which is a positional target for the 1 week, and the support and stop loss should be kept around 183.50. So we like Castrol and BHEL for the short term 1 week time horizon.
Thank you so much, Vinay, for joining us, giving us a sense of your view on the markets at the current levels, as well as your top trading picks. Well, moving on, a small programming note for our viewers. CNBC-TV18 and HDFC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2. Welcome back to Midcap Radar. Well, the markets have picked up steam, especially in the last 15-20 minutes of the session. Names like BSE, Escorts, etc. trading near the day's highest point. Well, Winnie joins us now. There's some news flow on both Aurobindo Pharma as well as Zydus Life Sciences. Winnie joins in with more details.
Good afternoon. So yes, you have both these stocks in focus today. Now, Aurobindo Pharma, one is a bit of a negative news coming in after US FDA has actually classified one of its warehouse of its subsidiary, that is Aurobindo Pharma subsidiary, which is in New Jersey. So one of its warehouse has been indicated as OAI. Now that's official action indicated. That means the regulator, there will be some regulatory as well as administrative actions that need to be taken on this front or recommended by the regulator for Aurobindo Pharma. The inspection had been concluded with 5 observations. So keep an eye out on that one. As of now, seeing a decline of almost 2% in today's trading session. Other than that, Zydus Life is the one we are keeping an eye out on as well. A bit of a competition increase is what they're seeing coming in. Now, Amneal Pharma has launched its Asacol HD in the US. Now, Amneal has become the third company who has come out and the third generic player who has received this approval for the product that Zydus Life is also making, that is Asacol, and Zydus, Teva, and now Amneal has come into play as well. Zydus Life has been guiding previously, and they have been talking about one competition player coming in, and that is a competition that is from Amneal, and that has come into play. So yes, there is competition which they were also watching out for. Phillip Capital says that the impact of this on Zydus's revenue for FY25 would be around $31 million on the revenue front due to this incremental competition, and in FY26 the impact would be of around $61 million in FY26. So surely a one to watch out for. Maybe some bit is factored in, but it's come earlier than what it was expected for Amneal in terms of entry as a competition. So that is why one should keep an eye out on Zydus Life.
Keep an eye out on both of these names as well. Vinny, thanks a lot for that. And since we are on the subject of pharma names, these two broader market pharma names are seeing some very, very sharp moves on the upside in today's session over the last few minutes. Suven Pharma is one of them, 13.5% higher now on the stock. It's seen a very strong uptick over the last few minutes. There you can see at the highest point of the day now it had opened in the red, and since then it's been a one-way recovery in the last couple of hours for Suven Pharma, 12% higher, and the other one is Piramal Pharma. That too is trading with gains of 10% as we speak. So all of these broader market pharma names are doing fairly well for themselves. Piramal Pharma made a high of around 228 in today's session. It's a slight cool off from there, but still holding out to gains of 9.5 to 10%. But a broader market name that had seen very sharp moves at the start of the session and then cooled off from the highs is Just Dial, and that is after Nuvama had upgraded the stock to a buy. Rima is joining in with more details on that. Rima.
So as you rightly pointed out, Just Dial has been upgraded by Nuvama to a buy. Target price remains unchanged at 1,140. And the key thesis is that valuations are compelling. Yes, growth rates for Just Dial have been slowing down. They're facing certain challenges, but valuations, according to them, are fairly attractive. And the key reason is the cash on the books. The cash on Just Dial's books is in excess of 5,000 crore rupees, which accounts for more than 70% of the company's market capitalization. This is the accumulated cash. The company is also generating a lot of cash. So according to Nuvama, if you take two scenarios, one in which if you just take into account the cash on the company's books, which will be there over the next 2 years, then they're saying the core earnings, which is the market cap minus the cash, would be at just a PE of 3x, the lowest, in terms of compared to historical levels. The second scenario is the company pays out dividend to shareholders, and then you've got a very attractive dividend yield. So in both the scenarios, given the cash the company is generating, Nuvama finds Just Dial fairly attractive.
Rima, thanks a lot for that. Off the highs of the day, Just Dial still holding on to gains of around about 3%. But take a short break. But just before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, where you can get instant access to breaking news, in-depth articles, and financial news updates at your fingertips. You can download this app from the App Store or from the Google Play Store right away.
Very good. One of those massive roads today.
So much longer, much more. 125 is like a very one time.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million subscribers now, so
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Welcome back to Mid-Cap Radar. Well, one stock from the utility space that's doing very well is NHPC. Earlier today, we had highlighted about how CLSA had gone ahead and upgraded the rating on the stock from an earlier outperform to now a high conviction outperform rating. Although they've lowered the target price by 3 rupees, earlier target price was 120, they've now kept the target price at 117 rupees, mainly to factor in higher capex on the back of cost overruns. However, what CLSA feels is that the recent 25% plus stock correction that was witnessed actually gives an opportunity to investors to accumulate what is essentially a very inexpensive utility. Remember, NHPC now trades at 12 times FY27 price to earnings. Now, what is the key catalyst according to NHPC? And also remember, we had the management on the channel yesterday. They had indicated about how one very important project called Parbati 2 would be starting operations from the next month onwards, and CLSA estimates that that would add close to 27% to the regulated equity. Along with that, another key catalyst they notice is the entry into shorter duration regulated pump storage, and along with that, they anticipate a 2x increase as far as the regulated equity is concerned on the base of FY24 till FY28, as large projects including Parbati, the other Dibang projects, a whole host of projects are expected to reach fruition, and that is something that's expected to drive the EPS up. Not only NHPC, the whole host of private PSU utility stocks are doing very well today.
Interesting as well. NHPC has corrected significantly from the highs as well. Highs of around 117, currently at 79. And a very interesting point that CLSA also makes is that it expects the stocks to double in the next 4 years. So interesting take there from CLSA on NHPC, the stock doing well for itself. On to Fin Street then. Abhishek puts the spotlight on how banks fared in the quarter gone by. Abhishek.
Banking sector performance in Q3 FY25 was led by PSU banks. PSU banks outperformed private banks on key parameters like loan growth, net interest income growth on a sequential basis, asset quality, as well as return ratios. However, they lost out to their private counterparts with respect to net interest margin. But before we come to comparative performance between these two, let's take stock of the industry trend seen in Q3 FY25. So, Indian banking sector reported one of the lowest net interest income growth in last few quarters. So deposit growths are coming in at a huge cost, and unsecured growth, especially for private banks, is moderating, thereby impacting the net interest margin of the banking sector. Sequentially, if you take a look, operating profits for the banking sector declined the highest in last 5 quarters. This was also due to the fact that treasury income was strong in Q2 FY25 for many banks. Profit after tax declined for the sector sequentially, third time in last 5 quarters. So coming back to PSU versus private banks, the net interest margin of PSU banks declined by 11 basis points quarter on quarter, and that of private banks actually improved by 4 basis points sequentially. Now, PSU banks had entered the low yielding corporate segment in the last few quarters, which actually was vacated by the private banks at lower yields. So this impacted their ability to hold on to healthy net interest margins. Now, PSU banks have not been into unsecured lending in the retail segment over the last few years. Guess what? That actually saved them from asset quality woes. So for 5 quarters in a row, their quarterly annual slippage ratio has been lower than that of private banks. In Q3 FY25, the slippage ratio might be at historical lows for PSU banks at around 0.7%. PSU banks have outperformed private banks on asset quality. So gross NPA ratio and net NPA ratio of the PSU banks actually declined on a sequential basis in Q3 FY25, while gross NPA ratio and net NPA ratio of the private banks increased quarter on quarter in Q3 FY25. Loan growth of PSU banks on a year-on-year basis has been better than that of private banks for second quarter in a row. Now, private banks' loan growth is actually impacted due to slowdown in loan growth momentum that you are seeing in HDFC Bank. So, return on advances on an annualized basis has actually declined for PSU banks and private banks on a sequential basis. However, PSU banks have outperformed on return on advances if you take a look at the 5 quarters. So over the last 5 quarters, their return on advances has improved by 39 basis points when compared to 15 basis point decline for private banks. Overall, lenders focused in the microfinance sector like Utkarsh Small Finance Bank, Suryodaya Small Finance Bank and ESAF Small Finance Bank have seen their net interest income decline between 10 to 14% on a sequential basis and from +9 to -19% on a year-on-year basis. Now, these three lenders have seen massive operating profits decline. On a year-on-year basis, it's ranged between 27% to 56%, while on a sequential basis, it's ranged between 11% to 44%. Now, ESAF SFB and Utkarsh Small Finance Bank are the only lenders to report net loss in Q3 FY25 amongst all the banks. Now, pain is not only on the asset quality, but also on the top line for some of the lenders who are actually focused in the MFI or microfinance sector. Let's take a look at the outlook. Now, loan growth may pick up in Q4, but may remain sluggish on overall basis. Liquidity deficit is coming down in the banking sector. Deposit growth may inch up a bit, but the cost of deposit will remain elevated. So you can expect the net interest margin of the banking sector to remain under pressure relatively more for private banks than PSU banks. Slippages will remain elevated, which can impact the return on assets for the banking sector. Valuations, they remain inexpensive but may remain at current levels until earnings downgrade cycle ends.
Abhishek, thanks a lot for that. And we call time on this edition of Midcap Radar with the Nifty almost going back into positive territory. On to the last 90 minutes of trade from Vivek and me. It's goodbye for now. MF Corner when we return.